Hi, good afternoon. My name is Ram Dhamija, and I'm here with the market report for today for Sensex expiry for 20th of December. What an expiry it was. It just blew off the option sellers completely, I'm sure. The market actually moved, if I'm not wrong, almost 5,000 points for Sensex, up and down if you take into account the movements. And the straddle premium was what? It was 780 points to start with. So for a 780 point straddle, the movement was close to 5,000 points. And it was a complete blowout of an expiry for most of the people. What typically happened was Sensex opened at 79,000. It went down and then it went up sharply, taking all the calls, stop losses with it. And then came the sharp down move. And in between, there were so many spikes that no matter where your stop loss was, it would have got triggered. So that was the story for today for Sensex. The calls and the puts both went up 5x, 10x in some cases. And then came the waterfall. And as we speak, Sensex is down hugely. Not only Sensex, the other mainline indices are also down significantly. So yeah, very tough day today for option selling, and that has been the case throughout December. What can potentially save you is if you have fixed stop losses in the system, then they will get triggered immediately and you will be out. So you won't end up fighting the market. The kind of system that I trade typically does that. So in the morning itself, both the side stop losses got triggered for Sensex and my positions were closed and I was like happy with it. In any case, my Sensex contribution to my overall portfolio is very less because it's not it's not, I would say, at the same level as Nifty. Even if you see the kind of open interest, etc., that exists. So as of now, I'm not very comfortable in Sensex, but I've just kept some quantity over there just to see, how the trades play out. So both the sides got triggered and I was out within the first 15-20 minutes and that was it. But what happened after that, if anyone was still trading the Sensex, they would have had a nightmare. Now, what else has happened? VIX has crossed 15. Now, that is a slight worry sign. I won't say a danger sign because a danger sign would start at 20, 25 kind of VIX. But the VIX has gone up. Now, is it in anticipation of January, which basically preludes the budget, or is it something else, or is it just a normal random movement? We don't know. But if I have to draw some correlation with it, the international markets have also seen a severe downfall after the Fed meeting, and the S&P VIX we saw went up by 74% one day, though it cooled down the next day. But the volatility is increasing across the markets. And one very significant thing that has happened is that the dollar index has hit 108, which is very high. Now, dollar index hitting 108 is a very danger sign for all the emerging markets because FIIs tend to pull out money from the emerging markets and take it back to US. So, and that is what we are witnessing also in terms of FII selling. Which is actually again started big time. So December that was green for FII is now flat. In fact, negative 500 crores. And today's figure we don't have. If we add that, then it's going to be a much higher negative number. So FIIs are selling. The world markets are not very helpful right now. Our currency is depreciating big time. So we have crossed past 85 to a US dollar. That again is worrisome. Again, when the currency depreciates, then for foreigners, their returns actually go down because their returns are denominated in USD. So that is not a very healthy sign, though it is good for some sectors like IT, pharma, etc. But that's a different story. What else happened today? Nifty OI is again skewed towards the calls. So out of 30 crore total positions, 18 crores are calls, and the PCR is at 0.69. That's a bearish sign. So even in OI, bearishness has started emerging. In terms of sectors, today mid cap was down -2%. So this selling pressure is now being seen in the broader indices as well. Mid cap and small cap that were holding out earlier. Small cap even is holding out today, but Mid cap, which was holding out earlier, saw minus 2% down. IT is down minus 2. PSU down minus 2. Momentum indices are down minus 2 today. So it was across the board kind of selling. Now, what has happened in the indices per se? If you see, Nifty is down minus 10% from the top. Last time we reversed from around minus 11%. This time we're already down minus 10, and as we speak, there doesn't seem to be any sign of reversal coming in. And even the US futures are down. So Nifty is down minus 10%. IT is down minus 5. FMCG is minus 16. So we are seeing a lot of pressure on consumption names continuing. Media index, I know it's not very significant, but that's down minus 25%. A full index is down minus 25%. PSU is down minus 17. Public sector enterprises down minus 18. Auto is down minus 18. Commodity is minus 16. Small cap, surprise, is down only minus 4. So what is this indicating is that there is a overall pressure on the markets, led by Nifty, of course, because we had not got this minus 10% correction for a very long time, for 3-4 years, if I'm not wrong, after COVID. So we are seeing this correction now come in, and this is the second time we are going to hit that. After minus 11, we kind of gained some 5%, but then again we are down to minus 10. So this is a broad-based selling that's happening in the markets, and where is this going to stop? That is anyone's guess, actually, if you ask me, because I was anticipating that come December and at least the latter half of December, especially after 20th, is relatively cooler period wherein the FIs also take a break. So is this the culmination? Is this the final selling that we are seeing today? I don't know. But this is quite relentless in terms of what we are seeing today, and what is also manifesting itself is in terms of the options. They are just going completely berserk, especially for option sellers. So I pity, actually, I feel for the option sellers who are actually doing discretionary right now, because it's very, very tough. For system traders, their losses are defined. So for us, it is okay because we know what our max loss is, and we take that and we see our PNL on a monthly basis. But for discretionary traders who are trying to fight the market, my suggestion would be don't take fixed stop losses, and it's best to avoid the market when it is so volatile. So that's it for me from today. If you like the video, please like it, please share it with your friends, please subscribe to it, and I shall see you soon with another update on the markets. See you. Bye.